My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on December 18th, 2015. Our time is 8:48 Mountain. Our radio show runs on 6:30 CHED in Edmonton, and we will be doing shows over the holidays, taping shows the next 2 weeks. So listen for us. And if you ever miss a radio show, don't forget they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on radio. You'll find us there. We're portable. We go on any of your portable devices. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week is absolutely gorgeous. And we have auction results from Christie's from about a week ago in the second half of the show, so keep listening for that. Our featured diamond is a .45 carat pear-cut fancy intense blue. And there was a big price paid for a blue at auction here recently. In fact, a couple, and we'll talk about it. But take a look at our featured diamond, rarecoloreddiamonds.com, featured diamond of the week. Telephone number 1-800-432-1022. As we tape today's show, Canadian dollar at 11-year low. We also have oil breaking 35. And this is quite something when you think about it. Gold and silver, after they raised rates in the United States, they have been very up and down. We've seen some very big moves to the downside and some moves to the upside as well. Interesting note, with the TSX out of Toronto, minus 25.38% TSX return year to date in U.S. dollars, the worst of the major markets in the world, according to the Canadian Business Channel. But Harold, your predictions coming true. Canadian dollar going down, oil going down, TSX stock market not strong. We saw a pullback in gold and silver. You predicted that. The raised rates in the United States and diamonds doing very well at auction. All of your predictions are coming true once again.
Well, the fact is that what's happening in the market is fairly predictable at this particular point. I do have to say that not many were putting the Canadian dollar down as low as I was, or oil, or gold, but the fact is that they're all, in a way, interconnected. So what we did see, obviously, is, a minor increase in that the Fed raised interest rates. So as a result of that, a lot of that was already built into the market. We had already seen gold go to 1,050. We saw the U.S. dollar rally to over par. All the things that were supposed to happen by the Fed raising rates happened. And then as we got closer to the time when they were going to raise rates, there was some feeling that maybe they weren't going to raise rates. So then you saw the market back off a little bit. We saw the U.S. dollar go back down to 98 cents. We saw gold go back up slightly type of thing. So when it actually came out yesterday, on Thursday, all of it was basically built into the market. However, what happened is that gold dropped $22 after they raised the interest rate, brought it down to 1,050 again. So 1,050 is very heavy support for the U.S. dollar. For gold at this particular point. Once we see two closes below 1,050, which I'm positive we're going to see, then we're going to see gold come down to the next level of around 1,020, 1,023 in that area. There's heavy support at 1,000, but the heaviest support for gold, believe it or not, is the low that we saw back in 1980, or the high that we saw back in 1980, which is $850. So it depends on how high the U.S. dollar is going to go. My prediction is, and I'm pretty confident on this, is that the U.S. dollar is going to 108 to 110, going to test the highs that we saw back in the 90s. So that's why I'm looking for gold to go down. It's not that I'm bearish on gold. It's just that there's a direct correlation between gold and the U.S. dollar. So the fact is that the stronger the U.S. dollar, the weaker gold is. When we first started doing the show, basically, 16 years ago, the price of gold was at $250. That's because the U.S. dollar was at its highest level. So we are anticipating that gold is going to come down, the U.S. dollar is going to rally, the Canadian dollar has to continue to fall. And I'm Canadian myself. I'm not in any way putting down the Canadian dollar or putting down the Canadian economy, but it's my job to tell you exactly what's happening so you can make the right decision. And the fact is that the Canadian dollar has hit an 11-year low. I'm probably one of the only analysts that said that the Canadian dollar is not only going to fall, but it's going to fall to an unbelievable price of around 60 cents. I know most people feel that that's a ridiculous call, but I'm pretty confident in the fact that that's going to happen because oil is going to break 30 and probably drop down into the 28 and maybe even the $26 level, which is going to hurt the economy in Alberta, unfortunately. But the fact is that the reason why this is happening is that there's a massive glut of oil on the market. And you've got the Saudis that are pumping oil like crazy because they can pump out cheaper oil than anybody else. I'm in Las Vegas for the weekend because I'm here for a family event. But the fact is I was out for dinner with some people last night. And again, the feeling is that the oil market has got to continue to fall because we're going to see that at the beginning of the year, Iran is going to start to ship some serious oil at a loss. Saudi Arabia is pumping oil at a loss. The people I was with the other night are from South Dakota, and they're saying that which was booming at one time and now is almost like a ghost town. So the fact is that there's a huge glut of oil on the market. We're going to continue to see that. We're going to see at the beginning of 2016, Iran coming back onto the market and shipping serious oil, and so is Russia. So look for the price of oil to drop, and consequently, the Canadian dollar dropping with it, because there's a direct correlation between the two, just like there's a correlation between gold and the U.S. dollar. So my predictions at this point is that oil is going to drop down below 30, probably going to drop to around the $28 level, and if we see massive production from all of the areas that I just outlined to you, it's even possible that oil could go lower than that. And I think that a lot of it has to do with the Saudis that is just trying to punish everybody at this particular point and drive most of the competition out of the market. Now, do I feel oil prices will go up eventually? Yes, I certainly do. I believe that there will be a time in the foreseeable near future that oil will bottom out and will be a great buy, and I'll certainly let you know when I think that's going to happen. It could be a very good money-making opportunity. But at this point here, it certainly appears that the Canadian dollar and oil will continue to drop substantially, and so will gold. The U.S. dollar will be the strongest currency. Now, my clients are situated in U.S.-based, dollar-based investments and doing tremendously well. My clients are making anywhere from 25 to 100% return on their money. And if you're not making that kind of return, you need to give me a call. I'll spend as much time with you as you need. I'll let you know exactly what I think is happening in the market and how you can possibly profit by it. So by all means, give me a call, and it'll be my pleasure to sit down over the phone and talk to you and let you know exactly what I feel you could do to try to improve your investment situation. All in all, the only thing that I see that could possibly stop all of the situations that I'm talking about, which is gold dropping, the U.S. dollar getting stronger, and what's happening in Canada, the only way that I see that not happening is that if there's a terrorist attack. So the fact is that there's a lot of geopolitical situations right now that are extremely concerning. We're hearing about them almost every day. That's why it's very important to own gold, because you never know when a situation is going to come around that's going to make gold run. And that is the one area that could make gold run, and depending on where that scenario lies, if there was any of these threats that ISIS is making towards the United States, towards New York or whatever, or Washington. But the fact is that if that did happen, then all bets are off. You're going to see a total reversal in the markets, and depending on how severe the situation is how the markets are going to react to it. If there was a terrorist attack in New York, for example, on any of the financial areas like Wall Street type of thing, then you could see the stock market drop by thousands of points. So again, I don't normally like to trade gold. I like to hold gold as a hedge against all bad things that could possibly happen. And that's the number one thing on my radar at this particular point, is the fact that that is possible. They have discovered that there's over 1,000 of these cells ISIS cells within the United States already, and they also have discovered a massive training facility in Mexico that trains for ISIS. So it's a concerning situation, obviously, and the fact is we know that the borders are not really locked down between Mexico and going into Arizona and Texas. So again, that is a major concern. So the fact is that if the markets just remain the way that they are, I think that we're going to continue to see the markets react the way that I've outlined. But again, you never want to be out of the gold market because of the scenario that I just gave you, and that's a real situation. So again, we are anticipating that the Canadian dollar and oil will continue to drop, and if you're not making money at this particular point, you need to contact us because our clients are doing extremely well. We've called every one of these markets correctly. I know they're not popular calls, but the clients that are making money with us are extremely excited about that. So again, we have a lot of investments at this point that are American dollar based, and even though it's going to cost you about 30% or more to convert from Canadian to American, the profit potential is outstanding. So again, it would be my pleasure to certainly help you get into a strong financial situation based on what the financial situations are at this particular point. So again, Randy, we're going to go into a time now which, again, the next 2 weeks are going to be very lightly traded. There'll be a lot of the traders that are out of the market, and we're going to see more extreme moves because there's very little trading and very light trading, so the moves can be more exaggerated. But again, we never take a day off. We've never not done a radio show in the 15 or 16 years that you and I have been together, and that will continue over the holidays. No matter what is happening, while it's Christmas and New Year's and all the holidays, we're going to be able to report to you exactly what's going on. We're going to be your eyes and ears and let you know exactly what to do as things get more and more volatile. Again, I believe that our markets are going to make our clients an awful lot of money. So that's the way I see the markets at this point, Randy.
Thank you for the update, Harold. And one thing to keep in mind as well, tax loss selling. A lot of people selling stocks due to the losses they'll take and being able to write those off. Harold touched on geopolitical. Of course, one of the events of the week, the Los Angeles school system shut down because of a potential terrorist attack, and they found out it was a hoax. Connect with Harold, rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week, and this is a beauty. We will have some auction results for you in the second half of the show. A 0.45 carat pear-cut fancy intense blue is our featured diamond. See it at rarecoloreddiamonds.com, featured diamond of the week. One of the things to be very cautious on going forward is the stock market. Where can you shift your money and have it profited and protected at the same time? And we're talking about being very cautious when it comes to stocks. Investors have spent the last 6 months piling into cash. In the latest update on investor flows, analysts at the Bank of America Merrill Lynch noted that during the second half of 2015, money market funds had seen $212 billion in inflows, about $48 billion in during the last 4 months. Over the same period, $31 billion had moved into stocks and $27 billion had come out of bonds. Money market funds are basically an alternative to actual cash and are often collections of short-term treasuries or highly liquid assets. And so what this data shows is investors have been piling into assets that won't earn much return, but simply preserve an investor's capital. And that was one of the things that the late Richard Russell had said to us prior to passing away, and we passed on our show, and that is it's preservation of capital. It's return. It's not so much the return on your capital as the preservation of your capital in the times that we're in. Also, Henry Blodgett came out and regarding the stock market said, I think stocks are priced to deliver lousy returns over the next 7 to 10 years. I would not be surprised to see the stock market drop sharply from this level, perhaps as much as 30 to 50% over a couple of years. None of this means for sure that the market will crash or that you should sell stocks. And remember, he's more of a stock guy. In fact, he even continues to own stocks and he's not selling. It does mean, however, that you should be mentally prepared for the possibility of a major pullback and lousy long-term returns. That from Henry Blodgett, who started Business Insider. Before that, was an equity analyst of some note, and he's basing it on how richly stocks are priced. If they're richly priced, you're really not going to be making much money in the future. Also, Jesse Felder of the Felder Report says the broad stock market today offers less than a 1% annual return over the next decade, along with a large double-digit potential drawdown. It would take another major bear market similar to the last two for stocks to simply fall to their median valuations over the past decades. This potential downside is also confirmation by the record level of margin debt in the market. So owning the broad stock market today is essentially, and this is the key point here, and you can see this in our free weekly newsletter, risking dollars to make pennies. Risking dollars to make pennies. Also, another thing to keep in mind, and this is very important, some of the stats that we're getting, not 100% accurate. In fact, adjusted net income, adjusted sales, and adjusted EBITDA are showing up in earnings reports at hundreds of U.S. companies. Without those adjusted numbers, third quarter earnings per share fell 13% for the biggest U.S. companies. The Wall Street Journal reports it cites research from Deutsche Bank, which found that 1 in 10 major securities filings included the term adjusted EBITDA. EBITDA refers to adjusted earnings before interest, tax, depreciation, and amortization. About a quarter of the earnings-related filings this year included figures that don't comply with generally accepted accounting principles, or GAAP, as well as more standard measures, according to the analysis by the journal. To give you an example, here in Canada, and this was reported by the Canadian Business Channel, $7.48, that is the difference between GAAP and non-GAAP earnings at Valiant, the drug company, 9 months to the end of September. So, Harold, here we have the TSX, negative 25% year return in U.S. dollars, the worst of any major market in the world, according to BNN. And then we have people coming out and saying the way companies are reporting, it's really not giving you an accurate reading. So they're even more overvalued potentially than we already believe they are. And if you're going to be shifting money into an investment, you don't want to be in an investment where they're saying over the next 7 to 10 years, you're going to be getting lousy returns. In fact, maybe even 1%. With, as they were saying here, Jesse Felder risking dollars to make pennies. And Harold, that's something that obviously is not a good bet, risking dollars to make pennies.
Very true. However, most investors, especially in the United States, are only comfortable or mostly comfortable with stocks and real estate. And neither one of those are strong investments at this particular point. So the fact is that we all know that the U.S. stock market is manipulated, and it will continue. So I believe that you can't really look at the Dow as a safe place to put your money. It's a gambling casino. But the fact is that I still believe that the Dow is going to go to 20,000. But you won't make any money in it. That's the whole thing. Just like in the TSX or Canadians that invest in the Dow in their retirement savings plans, you haven't made any money in the last decade. How is that possible? Because there's only a few stocks that are going up. In the Dow, if you don't own Google and Apple and some of those type of stocks, you're not making any money. So do I believe that the Dow is... The only way that I believe that the Dow is really going to crash is if there's what we spoke about before, something to do with the terrorist attack that happens in New York. If you notice that with the Dow, it shrugs off every major situation that happens around the world. With what happened in Paris last month, the Dow did not react in any way, shape, or form to that. And it doesn't. The only thing that the Dow will react to is something that specifically attacks the Dow in New York. And I feel that we will continue to see the Dow Jones manipulated, but nobody's going to make any money. So that's the truth. If you don't own those extremely high-priced Google and Apple and Netflix and those type of stocks, you're not going to make any money. And that's not where I would put my dollars in any way, shape, or form. It's just way too risky. And the analogy is 100% correct. You're basically spending dollars to pick up pennies, and we don't do that. We look at much more conservative investments, or we look to get into an investment, for example, like oil or the Canadian dollar or whatever, when they hit their lows. And that's what we're going to bring to you. But we do have opportunities. Our clients are making money, where most are not. We're not speculators here. I don't leverage. I don't take unnecessary risks. But we do know the markets extremely well. And again, the proof is in the pudding that our clients are doing better than almost anybody else out there. So if you're not doing well in the markets, if you're concerned about the volatility and everything that's going on and just don't know what direction to go in, all you have to do is pick up the phone and give me a call. And it doesn't matter how much money you have. I will sit down and give you my best analogy of where you should be investing, or if you should even be investing. In fact, many times people call and I tell them not to do anything because they're just not qualified or can take the risk or whatever of being in certain investments. So again, all we want to do is help. If you notice, we never miss a radio show. We've done over 500 radio shows in a row and have never missed one. We're probably the only ones that run shows over the holidays when most people are not around. And the reason that we do that is because you need the information to make an intelligent decision. So again, I'm very excited about what's happening in the markets as far as my company goes, but I can certainly understand how people are concerned and confused with everything going on because a lot of it doesn't make a lot of sense.
Take Harold up on his offer. A very generous offer from Harold, an expert when it comes to investing, gold, silver, diamonds, hard assets, the markets in general. RareColoredDiamonds.com. You can connect with Harold or speak personally and privately with him about where you can profit and protect the investments you have today. 1-800-432-1022. 1-800-432-1022. The call is free. The conversation is 100% confidential. And remember, now is the time, as we head into 2016 in a matter of days, to right your financial ship. If you had a bad year financially in investing, now's the time to look at making some changes. And Harold will be happy to speak with you, and you can connect with him at RareColoredDiamonds.com or 1-800-432-1022. Our featured diamond of the week from RareColoredDiamonds.com is a .45 carat pear-cut fancy intense blue. It is absolutely gorgeous. You can see it online. You can see it in our free weekly newsletter, Featured Diamond of the Week. RareColoredDiamonds.com, 1-800-432-1022. If you'd like to receive our free weekly newsletter, connect with Harold. We'll send it out via email free of charge to you every week. You'll see the same material that Harold and I are reading and passing to you on the radio show. Connect with Harold, RareColoredDiamonds.com, 1-800-432-1022. We'll come back and talk more about diamonds in detail as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on December 18th, 2015. Our time is 9:14 Mountain. We will be taping a show on Christmas Eve and New Year's Eve to run on the weekend. So we will be doing shows, and you can listen to us on 6:30 CHED Sunday afternoon at 3. If you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, RareColoredDiamonds.com. Connect with Harold at RareColoredDiamonds.com, 1-800-432-1022. Before the break, he made a very generous offer, and that is if you would like to speak with him personally and privately about your financial situation and get making some money in very difficult markets, profit and protect the money you have, speak with him, RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week from RareColoredDiamonds.com. It is a beauty, and Harold just informed me it's now in a ring, and he'll give us more details. but it's a 4-5 carat pear-cut fancy intense blue. And what a beauty it is. Absolutely gorgeous. And speaking of blue diamonds, Christie's magnificent jewel sale, Thursday, December 10, 2015, New York City, Rockefeller Plaza. We have auction results, and one of the results, lot 334, a colored diamond ring set with a round, brilliant, fancy, intense blue diamond, weighing approximately 1.74 carats. Now, the estimate on it, Harold, was $700,000 to $1 million. It went for $1.925 million, $1,925,000. Outstanding. Also, lot 354. This is a diamond ring by J.E. Caldwell, and it was a marquee, brilliant, fancy to fancy intense blue diamond, and it's another one that's absolutely gorgeous. The estimate on it, $400,000 to $600,000. The price realized, $1.2 million, $1,205,000. Harold, our featured diamond is a blue diamond, and there you have it at auction. 2 diamonds last week that went for outstanding prices. And we can't forget about the big blue diamond that was sold about a month ago, purchased by the Chinese billionaire for his daughter. It sold for $48.5 million, that giant blue. So, Harold, blue diamonds doing very, very well in the marketplace.
You bet. And they are spectacular, especially the featured diamond. It's an intense blue, which is a very heavily saturated diamond. So what we did with that, it's such a beautiful diamond and so rare that we put it into a magnificent setting. So now that beautiful 45 point, which is about a half a carat, intense blue pear shape, which is an extremely rare cut, is now in a magnificent ring surrounded by pink diamonds. It is spectacular. So just judging by what has happened with blue diamonds has probably outperformed any asset class over the last 10 years. I know that's a fairly broad statement, but the fact is that most blue diamonds have gone substantially higher, and some have gone up over 1,000%. In actual fact, 10 years ago, you could have bought a vivid blue diamond over a carat for about $200,000 a carat, and now vivid blue flawless diamonds, if you could ever get one, they've been sold for $2 to $3 million a carat. In fact, even higher than that. So when you're talking about safe assets, that's what we're talking about. We're talking alternative assets that are not stock, paper, bond related. These are assets that you own outright, that you hold on, and they are extremely important. They're called portable private wealth, and they go up in value tremendously, more so than almost any investment without any type of risk. Because the fact is that there's so few of these diamonds available in the world today that when does come available for sale, they are just absolutely the greatest investment. And as much as blue diamonds have gone up and still continue to do extremely well, that's what's now happening with pinks. Because Argyle pink diamonds only have about 4 to 5 years left. The Argyle mine that produces 95% of the pink diamonds in the world is getting ready to close down. It's been in operation since 1986 as one of the largest diamond mines in the world, producing 30,000 carats of diamonds a year. However, those 30 million carats of diamonds a year, most of those are low-grade industrial white diamonds that are used to cut other diamonds. However, out of this mine comes the most beautiful pink diamonds in the world, and that mine is getting ready to close down because it's just not producing anymore. So those that own pink diamonds from the Argyle mine, or any pink diamonds in general, I believe are going to make a fortune over the next 5 to 10 years. These are not short-term investments. You know, the fact is you don't buy a diamond and sell it in 2, 3, 4 years. You're just not going to make the money. The longer you hold on to them, the more and more and more they go up. I bought a diamond, an Argyle pink diamond, one of the largest ones, back in 2003, a 2-carat vivid pink Argyle for about $300,000, $350,000. That diamond is worth over $4 million today. So the fact is that these never go down in value because there's so few of them. And now that we know that the Argyle mine is getting ready to close and there won't be any more pink diamonds per se, these diamonds will do what blue diamonds are doing. And they're still somewhat reasonable. the closer we get to the mine closing, which is going to be 2020 or before, these diamonds start to take on a life of their own. And investment-wise, there's nothing that compares to them. On top of that, what's very exciting is that diamonds, through us, are priced in U.S. dollars, and most of my Canadian clients that own diamonds that have bought them over the last 10 years bought them when the Canadian and American dollars were even. So not only have the diamonds increased tremendously, but so has the currency in our favor, and have actually added about 30 to 35%, and soon to be probably 50% in the currency alone. So again, if you're not making that type of money, you need to give us a call, because again, we've got some opportunities for you that will outperform anything that you're doing, and there's basically very little risk to them. So again, I'm very excited about what's happening in diamonds. The featured diamond is an extreme diamond. Very seldom, do you see an intense blue. And that intense blue, for those that are interested, and it will sell next week, but give me a call and I'll send you a picture of that diamond that we just got back, the blue, which is now in a magnificent setting. It's spectacular. And again, it's something that whoever does own that diamond, I believe, will make tremendous returns. So again, Randy, the diamond market is on fire because so many people right now are so concerned about the stock market, the bond market, the currency markets, the gold market. Every market out there is volatile. But diamonds keep going and selling at auction for more and more and more than what they're estimated. And it's not that Christie's and Sotheby's doesn't know their business. It's not that, a diamond sells for $1.9 million and they said it would sell for $700,000. It's just the times. It's just that people want to own assets like diamonds because they're portable private wealth. They never go down in value. They increase substantially more than almost any other investment. And, the beautiful thing is that a lot of us, want to retire one day. You're never going to retire if you have your money sitting there in a retirement savings plan. You're just never going to do it. If you haven't made money in the last 10 years, you're not going to make money trading the TSX or the Dow. You're going to lose most of your money if you have money in those areas. We can help you in that. So give me a call, and I'll gladly sit down with you and explain what your options are and see if what we're offering is comfortable for you. But again, the diamond market is on fire, and I've never been more excited about what's happening in that arena at this particular time. It's phenomenal.
Featured diamond of the week is a 0.45 carat pear-cut fancy intense blue diamond. You can see it online. rarecoloreddiamonds.com, and you can connect with Harold, 1-800-432-1022. We have an article from Barron's. It's in our free weekly newsletter, and it says, fancy colored diamonds to sparkle in 2016. Rare diamonds and gemstones will continue to fetch record prices. Hong Kong billionaire Joseph Lau paid a combined $77 million for two fancy-colored diamonds at auction in Geneva last month, $48.4 million for a 12-carat vivid blue at Sotheby's, and $28.5 million for a 16.08-carat vivid pink at Christie's. Extraordinary prices for extraordinary stones, and they went to his daughter, Josephine. But Lau is not alone in pursuing fancy-colored diamonds. Pink and blue diamonds and even yellow diamonds are among the hottest jewelry items this year, and that's not expected to change in 2016. Fancy-colored diamonds are probably more important today than ever before, according to Graham Thompson, Director of Jewelry Asia at Bonhams. He said at a recent Hong Kong press event detailing results from the Knight Frank Luxury Index. The term fancy speaks to the depth of color in a stone, with the fancy vivid having the richest hue. The Luxury Index, which tracks colored diamonds as well as jewelry among 10 asset classes, including classic cars and fine wine, rose 10% in the 12 months through September and 63% in the last 5 years. Prices of colored diamonds over the last 10 years up 142%. Now, most of the growth is from pink diamonds, up a soaring 315% in 10 years, and blue diamonds surging 154% in that time. The Fancy Color Research Foundation reports larger white diamonds have risen in value too, but much more slowly at a growth rate of around 5% a year for the last 6 years, according to Knight Frank. And they go on to say, what colored diamonds are going to be popular in the future? Well, auctions with headline-grabbing prices are one reason, and a bigger one is very, very little supply in the fancy-colored diamond market, says Thompson, and he says people want rarefied things. All signs point for the fancy-colored trend to be hot in 2016 and beyond. The big reason is this lack of supply. To start, there are simply fewer colored diamonds in the world, only a fraction of a percent of all diamonds, according to Tracy Greenstein, director of the research at Fancy Colored Diamond Research Foundation. Historically, supply has constantly lagged demand in all colors, the rarest sparklers of all, pink. About 1 in 10,000 carats of diamond or fancy colored diamonds of gem quality, and of these, only 0.1% are pink. That according to Bonhams. And nearly all supply of pink diamonds in the world comes from the Argyle mine in Western Australia, which owner Rio Tinto is expected to close within 5 years. That will have a huge impact on pink diamond prices, Thompson says. Now, Harold, we have this article. It's a very compelling article. It's in our free weekly newsletter, From Barron's Fancy Colored Diamonds to Sparkle in 2016. I encourage people speaking with you about it, 1-800-432-1022, or connect with you at rarecoloreddiamonds.com. Get the auction results from Christie's from last week, and you're going to see that now's the time to shift some money into hard assets like diamonds for the times that we're heading into.
You bet, Randy. How exciting. That's a great article, and the fact is that pink diamonds are skyrocketing and will continue to do so because, again, it's economics 101. When demand is high and supplies are low, the prices are going to go up. But in the case of pink diamonds, especially Argyle pinks, the mine that produces 95% of them, that's an extraordinary situation. Never again will we have a mine that does what the Argyle mine does. So this is something you want to take advantage of. This is something that, again, will turn out to be one of the best investments that you've ever made. And it's something that, again, most people don't know about and could never participate in. I'm also going to let you in on a little secret. After the pinks and blues, what are the next major diamonds to make these massive moves? Greens and oranges. Some of the rarest diamonds in the world are green diamonds and orange diamonds. You need nitrogen to enter the ground in order for a diamond to turn yellow or orange. Yellow diamonds, especially the ones that we carry, the Vivid Yellow Flawless, they increase by about 15% a year. But also, to see a diamond turn pure orange, are you kidding? Most people never even know that a diamond exists that is orange. And we have them. We cut and polish our own diamonds. We have our own cutting and polishing facilities in New York and in Antwerp, Belgium. So again, we also mine our own diamonds. So we mine green diamonds. You need, believe it or not, uranium in the ground to turn a diamond green. And they are so rare and so beautiful. And again, we have these diamonds in very, very limited quantities, obviously. These are not diamonds that could ever be mass marketed because there's only a few of them, a handful of them. But I've got not only green diamonds that are ridiculously rare and going to be the new pinks and oranges, the pinks and blues, but then I also have orange diamond, which will take your breath away. So, again, this is what we bring to our clients. We bring the rarest of the rare, the type of asset that will make you money over time and protect your equity. And with everything happening in the world, with all the fear in the marketplace and everything, I'm not saying put all of your money into any one investment. We never, ever do that. But it makes a lot of sense to get out of investments now that are not performing and get yourself into something that's going to do well for you over the longer term. Your retirement savings plans will never make you money. Never. All you're doing at this point here is putting money into an investment that if it doesn't return money to you, you've accomplished absolutely nothing. The government allows you to invest money and not be taxed immediately on it with the hope that you're going to invest that money longer term, make a profit on it, so the tax back to the government is going to be more substantial. Unfortunately, that's not happening. Nobody's making money in a retirement savings plan. So again, talk to me about it, and I'll show you other ways to get ready for retirement and to make the type of money that you need to make if you ever are going to retire. So again, Randy, greens and oranges, we've got some of the most amazing diamonds, and most people didn't even know that diamonds come in those colors, but they're extremely rare, and they're still priced accordingly, you can make a fortune in them. So very, very excited about what's happening in the diamond market.
Speak with Harold about our featured diamond, a 0.45 carat pear cut fancy intense blue. This is a beautiful diamond. You can see it online. Featured Diamond of the Week, rarecoloreddiamonds.com. You can see it as well in our free weekly newsletter. And I would really encourage you to get the article that is from Barron's, Fancy Colored Diamonds to Sparkle in 2016. We read a couple of auction results to you from the auction that happened Thursday, December 10, 2015, Christie's Magnificent Jewel Sale. And we had those two blues going for outstanding prices. Now, lot 131 was a colored diamond and diamond ring, set with a cut-cornered rectangular modified brilliant cut fancy intense yellow, weighing approximately 21.28 carats. And the price on that, the estimate was $350,000. It went for $605,000. Lot 120, a colored diamond and diamond ring, set with a cut-cornered rectangular cut fancy intense yellow, weighing approximately 17 carats. And the intensity, obviously, was intense yellow, natural color. The estimate, $250,000, and it went for $377,000. Lot 476, a colored diamond and diamond ring by Harry Winston. And this is a little different. Set with a rectangular cut, fancy deep brown orange diamond, weighing approximately 11.62 carats. And it was signed for Harry Winston. The estimate on it, $170,000, went for $245,000. Lot 410, a colored diamond ring set with a pair of modified brilliant, fancy, vivid, yellowish orange diamond, weighing approximately 2.2 carats. The estimate on it, $150,000, went for $185,000. We also have lot 216, a colored diamond and diamond ring, set with a cushion modified brilliant cut fancy intense yellow, weighing 10 carats. And the estimate on it, it was $120,000. It went for $173,000. Harold, we have these auction results. We can send them out to those that are interested. But our featured diamond is a blue diamond. And at auction, we saw a major increase over what was expected at Christie's in New York City. And it's interesting because normally New York City, you get the prices within the ranges that they expect. It's usually Asia where we see these big increases over the price that was originally anticipated. But for those that might have missed it, to give you an example, we had the lot 334 colored diamond ring, fancy intense blue diamond weighing 1.74 carats, and the estimate on it, it was $700,000 to $1 million. It went for $1.925. And lot 354, another blue diamond, and just an absolutely stunning blue diamond. The estimate on it, $400,000. It went for $1.2 million. So, Harold, our featured diamond of the week is a blue diamond that's now in a ring, and we're seeing blue diamonds do very well at auction. People should speak to you about this blue diamond before it goes very, very quickly come next week.
You bet, Randy. It's really a special diamond. Also, if you notice that it's not only the very expensive diamonds that are selling at huge prices, but so are the medium-priced diamonds. Don't forget, when you look at diamonds that are priced in the 100,000 range and they sell for 180 to 200,000, it doesn't matter how much money you invest. It's what the return is of capital. If you make 100% return on $1 million or on 100,000, it's still 100% return. It's all in how much money you personally have to invest. We have diamonds that start at 20,000. We have diamonds that go as high as 40 to 50 million. How many 40 to 50 million dollar diamonds do we sell? Obviously not as many as we do $20,000 and $50,000 diamonds. Most of my clients are hardworking, everyday people that want a better return. You put your money in the bank, you're not making anything. In actual fact, soon you're going to be getting negative interest rates like they are in Europe. So you want to avoid those type of situations. Yellow flawless diamonds will make you 15% a year. That's a beautiful return on your investment. You hold on to a diamond like that for 10 or 15 or 20 years and either cash it in or give it to the kids and let them hold it for another 20 or 30, and you have no clue how much that diamond is going to increase in value. The returns can be astronomical. I've mentioned many, many times on the show that my wife's girlfriend inherited a 5-carat pink diamond ring from her grandmother. Her grandmother bought it 50 years ago for $50,000, and today that diamond is worth close to $5 million. That's how much diamonds can go up in value. No stock, real estate, anything will compare to what diamonds will do, especially in the type of marketplace that we're in right now.
And Harold, you touch on smaller diamonds. 2 lots, 86, a colored diamond, a diamond 2-stone ring from Bulgari, set with an oval cut fancy intense orangey yellow diamond, and the estimate on it was $8,000. It went for $21,250, which is a very
that's a
nice return. That's
difference.
Right, a very nice return. Now we have another one here, Lot 184, colored diamond and diamond ring by Carvin French, set with a cut-cornered rectangular modified brilliant cut fancy vivid yellow. The estimate on it, $40,000. It went for $62,500. So, as you said, Harold,
50% return.
That's right. As you said, the lower-priced diamonds, and we've seen this in past auctions, and we can send auction results out to you. They do very, very well. It's not just the big jumbo diamonds that are doing well at auction. Our featured diamond of the week is a .45-carat pear-cut fancy intense blue. You can see it online, featured diamond of the week, at rarecoloreddiamonds.com. Take Harold up on his offer, and that is he's willing to speak with you personally and privately about the financial markets and the geopolitical times we live in. Obviously, with ISIS, if anyone watched the Republican debate on CNN out of Las Vegas, what were most of the candidates talking about? I will keep you safe. And that is a major concern for those in the United States and around the world. And now's a time for hard assets. It's an insurance policy in your portfolio. And you can speak with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Harold, we have about a minute and a half left.
Well, a frightening time to be on this earth. You know, there's so many things going on that have really never happened before to us. So again, we got to keep our head about us. You know, the fact is that you got to analyze the situations and not make rash decisions. You got to get all the information and digest it and make the right decision. And again, that's what Randy and I are here to help you with. We don't charge for the radio show, the newsletters, our seminars, or anything like that. We want you to make the right decisions, and we're here to help. So again, between the investments that I have to speak to you about that are based in U.S. dollars that my clients are making between 25 and 100%, if you want to learn about those, again, it's my pleasure to sit down with you over the phone and let you know if these are the right type of investments for you. But in the meantime, again, we appreciate you listening to our radio show. We got the holidays coming up. It's a joyous time to be with your family. I wish everybody a wonderful weekend and a very, very profitable day.
Thank you, Harold, for your knowledge and another great show. Canadian dollar down to 11-year lows. We're right around when we were taping the show when we started at about 8:30 in the morning Mountain Time on Friday, December 18th, right around 72 cents. U.S. dollar right around 89.99. And then you have oil breaking below $35. Gold and silver, very volatile. The TSX for the year, negative 25% when you factor in the U.S. dollar. When priced in U.S. dollars, that is the worst in the world for stock indices. The Fed did raise rates in the United States as predicted. And on the geopolitical front, they locked down the schools in Los Angeles during the week due to what turned out to be a hoax. But obviously, they didn't want to take any chances. There was a report that there was a potential terrorist attack going to happen, and they locked down the schools. These are the times that we live in, and you have to invest in a different fashion. And if you'd like to learn more, speak personally and privately with Harold Siegel at 1-800-432-1022 or connect with him at rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.